For more, let's bring in Avery Sheffield, VantageRock's co-founder and CIO. It's nice to see you. Thanks for being here.
Great to be here.
So this is good timing. You told our producers, the ruling won't have much of an impact on the economy, but I will report back on any additional insights following the Trump press conference. All right, so we have the Trump press conference. Let's get the insights. Now what?
Well, I mean, he's determined to keep the tariffs at as high of a level as possible to match the current revenue stream, right?
Okay.
And to keep up his leverage. Now, it is unclear whether he'll be able to completely match that, right, on just the limitations of the new tariffs. But it does seem like he'll be able to get close to that level. And if he's close to that level, I think that this decision will have much less of an impact on the economy than a lot of other factors.
Because it ends up like a wash?
A wash, maybe, I think probably maybe modestly positive for some companies that are able to have a little bit less of tariffs. But the uncertainty factor probably keeps them maybe from hiring at the same rate, investing in their businesses just because of the questionable Trump card.
How do you feel about the market overall right now? Like,
yes.
Like I said to the professor, take the issue off the table if it is a wash or ends up being maybe a net positive. But how do you feel about things?
Yes. Well, I mean, the markets are still very high relative to history, right? And the S&P is kind of just going along, not breaking out to the upside, but not really coming off much, even though we've seen some disruption under the surface and broadening out.
You mean from a price level or a multiple level?
So from a multiple level, the markets are still trading at well over 20 times. The S&P, the NASDAQ's even more expensive. That's in one of the very highest percentiles versus history.
Right.
So stocks are expensive. And if stocks are expensive, they're going to have to live up to those expectations.
Aren't they? Aren't they, though? I mean, earnings been good.
It depends. Earnings overall have been earnings overall have been good, but I think what you're seeing is a lot more bifurcation under the surface, and I think you're going to see a lot more ahead with the disruption from AI.
Like what? And
like
where?
What? Well, I mean, we're continually seeing headlines about AI coming in and potentially impacting software, right? There was just another headline this afternoon about Anthropic and a new cybersecurity solution it has that's actually impacting those stocks.
Yeah, no,
so,
we've seen a whole swath of those names go down. And you think there's more to go on the downside?
A lot more to go. I mean, from a valuation perspective, software in particular, you now have some very high quality software companies trading at 15 times even gap trailing earnings, 10 times forward earnings that are still growing earnings double digits. Those companies, maybe, they won't be as disrupted as much and actually have interesting upside here. We actually there were a couple smaller cap software companies that reported this morning that were up nicely, went up quite a bit. But a lot of software companies are still trading at infinite earnings on a gap, from a gap perspective, 40, 50, 60, 70, 100 times on forward earnings. If there's any chance that the terminal value is at risk, there's dramatic downside to those stocks.
Wow. So if there is still, and software does have more to go, what does that mean for the overall NASDAQ and the tech trade?
Right. Well, in terms of the NASDAQ, I think it's a question of, do we continue to have this move into semis, memory, everything levered to building out the data centers versus software? So if earnings are strong next week with NVIDIA's report, if we continue to see memory prices going up dramatically, maybe the NASDAQ will be okay. I'm not going to make a call there because the demand does continue to be very strong, right? And absent political pullbacks, absent or political hurdles, absent financing issues, we're going to see very strong data center spending, at least this year, right? Maybe even next year continues to increase. So not making a negative call there. So will those stocks continue to go up, or will they be more neutral? And then software, pulls down. But I think that the key takeaway is software, I think in particular, is nowhere near where it could go if AI continues to deliver the way it looks like it is. The other impact of that, though, that is more concerning for the economy is, we've already started to see layoffs in companies, in software companies, in other companies that are investing a lot in AI. And does that start to accelerate at some point and create a more negative impact on the economy overall?